Hey everyone, thanks for joining me here, guys. And yeah, really cool to be at another staking summit. You know, this is kind of the core event for the staking ecosystem, and I think the topic that we're here to talk about today, like MEV, block building, that's kind of very central to the staking economy at large, and it's sort of where the value is captured. And so today we want to talk a bit with like some of the leading protocols and different members in the supply chain of the MEV landscape, let's say, and dive into some of the questions, especially how MEV has developed in different ecosystems and how it differs there. But before we do that, we should have the panelists introduce themselves. So I'm Felix, I'm the head of ecosystem at Symbiotic, Universal Staking Protocol, and maybe we start with you, Murat.
Sure. My name is Murat Akdeniz. I'm the founder and CEO at MEV. We make Ethereum fast.
That was fast. My name is Artemiy. I'm VP of institutions at P2P.org. P2P.org is one of the biggest staking and restaking providers in the world. Roughly, our AUM is 10 billion. So glad to be here.
What's up, guys? Murat, you can't make Ethereum fast. 13-second block time. What are you talking about? I'm messing with you. I'm Zano. I'm CTO at Jito Labs. We work on MEV market structure on Solana.
All right, let's see if we find out today if Ethereum can be as fast as Solana. But yeah, basically, I guess that's also kind of leads into the first question that I wanted to ask is essentially like, how do you see the MEV landscape? How has it developed? How do you see it today in terms of like kind of the impact on, especially I guess staking in terms of that's what we're here in the Staking Summit. How has MEV impacted staking, and also like how has it impacted the UX? I know that's like something that also MEV is very focused on. So love to hear your takes.
Yeah, I'll start. MEV is a very sort of like it's this mysterious thing. Nobody really knows what's going on unless you're super technical and in the weeds. We're seeing a lot of funny games getting played behind the scenes, like all sorts of different fancy types of sandwich attacks. If you don't know what a sandwich attack is, it's basically it's a way to screw users over. It's at the cost of users, and it profits basically the person screwing the user over. So it's messed up. We're working on solving this on Solana right now by making the market structure, or the market structure across blocks consistent and unified through just uniformity across like scheduling algorithms.
Yeah, cool. Like in my view and what the data shows in ETH, it became healthier, like let's say less toxic over the last year, I would say, since mid 2024. We see mostly because of the majority of retail, some of the pro order flow goes to private mempools, and swaps are not hitting public mempools, leaving less space for searchers. Also, RFQ systems are growing, so this is another way of making it healthier. So yeah, basically this is what we see. The share of private mempools has grown significantly since like roughly mid last year, and it became we see less toxic activity, less toxic opportunities.
Yeah, I have a different take on like MEV. I think it evolved in a certain way for each network and its own particularities. Like Ethereum has its own things, and Solana has some things, and other new networks are popping up with their own things. But when you look at it from a staking perspective, for example, in an institution that allocates $100 million of stake for Ethereum and $100 million of stake to Solana, the institution doesn't particularly care about the particularities of each network, and they want to optimize their yield. They want to have some level of security. So I think this is going to have these protocols interoperate more and more in the future because of this. Because at the end of the day, there's a high-frequency trading firm that is doing these arbitrages or other MEV on these chains. And sure, there's some specialized on each chain, but ideally they want a piece of the pie across the entire game rather than for each network. And so does the staker. The staker is also interested in getting a piece of the pie across the game rather than each particular network. So because of these kind of two ends of this supply chain being interested across the networks, I think we're going to see more consolidation within these networks, or at least some interoperation when it comes to MEV.
Awesome. Yeah, we're going to get deeper into that. I think one thing that came up here from different parts of you, like sandwiching, right, as like a form of toxic MEV, and also Artemiy, you said it's going down, the toxic MEV. I guess there's just like also philosophical question in a way, what is good MEV, what is bad MEV, is it all bad? Do you guys have opinions on that? And if so, or if not, like who decides what is what and what's okay, or is everything good, or how do you deal with that?
I can go first. I have strong opinions on this. At the end of the day, like think of the guy who optimized all the MEV and didn't get sandwiched or anything, but bought ETH at 4,200. That guy's worse off today than the guy who's getting sandwiched at 3,200, but just by a few percent. So when you think of all of that, at the end of the day, like do I care about being large, within a large sandwich? Maybe in that spot moment, but over time, like I care about my portfolio's value. And yes, better market structures end up long-term better portfolio values, but like in the spot moment, the average user doesn't care. And like Robinhood is famous for this. If people cared about getting sandwiched on Robinhood by Citadel, Robinhood would go out of business. But Robinhood keeps growing every year, and people know this because they like the convenience, and they, at the end of the day, care about their whole portfolio's value over the years rather than getting screwed by 20 cents on a $4 order by Citadel. So, focusing on the better experience and the longevity of the systems rather than on the spot price to optimize everything for the end user, I think is the ultimate goal. Like Robinhood is a successful model, it works. Yes, we can come up with better market structures, but it's very important to not lose sight of like what matters at the end of the day. People want their portfolio to go up, and they're happy to like trade some convenience or some prices for convenience for that.
Yeah, that's an interesting point. On top of it, I think, like in my view, on the like gradation of bad, toxic, like sandwiches are like straight up bad, but in terms of backrunning, I think there are different sorts of it, and. One thing when searchers captures everything and don't share nothing to the user or like to the application, it's one thing. Borderline, let's say neutral. On the neutral side, we can say when the interface like wallet or some application captures MEV, but don't share it with the user. Just keep it for the revenue, maybe for development resource funds and stuff. It's like, I think, neutral. And positive, in my view, when this wallet or application captures MEV and shares back to the end users. So yeah, if the transaction execution is not getting worse, it's getting better, so it's positive.
Yeah, I think my take is that MEV is bad when it is not taking into consideration the user's actual intentions. So if I'm a user, I set 3% price slippage, and then I get sandwiched on 3%, that's like a fake price movement. And what the user is really doing when they're setting that 3% is, a lot of it is like baked in technical issues with like latency and like landing a transaction on Solana. What they're really trying to do is express a market order. And when you have someone that's sniffing transactions and basically exploiting that slippage parameter, it's completely screwing over the user's experience. And anything that screws over user experience, I think, is like a long run no-go for me.
Right, yeah, that makes no sense. I think like we're already like kind of diving into it where there are obviously differences between the chains and how this MEV can be realized and can be exploited, or how it exists. So maybe we go a little bit there, right? Like obviously we have Solana here with the high latency and like the model that's more based on I would say like you have to land the transaction on Solana, right? You just mentioned that that's kind of the key parameter there. Versus on Ethereum, I feel like the idea was more like you have the auction and the builder centralization. Maybe it's more the problem there in the current space. Like I guess curious to see how you see maybe like from your expertise, like do you look at Ethereum and you take some learnings from there? Do you think like this low latency issues leads to like MEV elsewhere that you hadn't like thought about, or how do you?
Yeah, I
do
mean,
that?
I'm curious what Murat thinks, but my biggest learning from how Ethereum evolved is that PBS, in at least the last state I knew of it, was not the ideal place to be. It just led to centralization elsewhere. It almost looks like you have a competition for building blocks, but then you end up with like 2 or 3 guys that build all the blocks on the network. And tomorrow Citadel can just come and really build all the blocks, and then that's not a great place to be either. They could just run at a loss and do that. But I think the main issue is like this privatization of order flow, and not really like uniform scheduling algorithms. From talking to a lot of market makers, the main thing they want is just like, hey, if at slot 1, this is how the auction works or how the scheduling algorithm works, I want it to work like that for like forever in time across all slots on Solana. Otherwise, they're changing their algorithm based on how blocks get produced. So that's my main takeaway.
Yeah, I mean, I actually agree with that. I think part of what went wrong with Ethereum PBS is that you now have a handful or less even centralized actors that extract from the pipeline, but these are not even tokenized or public actors, right? I think one of the things that Jito did really well is that I think if I think Jito is going to be successful, I can buy a token and then be like participating in that, whereas I cannot buy an STP token, unfortunately, and that just gets extracted outside of Ethereum. So, access to the exposure is one other thing that helps democratize MEV. Like, yes, there might be one entity that squeezes it, but like, can I access that in some way? I think that's really, really important. And I think that Ethereum sort of was very hyper-focused on decentralizing the validator set, which, we did get that. But, there's now 3 years later that there's some extraneous, consequences of that it's unclear if they're going to be solved because now ePBS is being delayed and there's other problems. So it's kind of the current market structure that is non-ideal, I would say.
Yeah, no, basically not much to add. I agree that PBS on ETH didn't ideally go centralizing like the builders, and it creates questions to censorship, potential questions to censorship. But on the other side, on Solana, when validators are more involved in block production, it just created validators who mostly do sandwiches. So it's like each approach has pros and cons, but basically not much to add.
Okay, yeah, thanks. I think there's I guess this is a new race to latency, lower latency, right? Increased bandwidth, lower latency. How do you see that impacting MEV? Does something like 00, is it like Flash Boys in the TradFi world? Is that a new thing where now you need to be very close in the data center to where the exchange sits, or how? Because I think also in the perp dexes, a lot of the validators are sitting or basically the API is sitting in Tokyo, and everyone's centered around that. I think in the DYDX set, everyone's Tokyo. So how does that impact the network topology, and is that a problem, or is that fine?
Yeah, I mean, unfortunately, price discovery happens on Binance servers. So kind of that's an external factor that sort of centralizes things around there. And then obviously all the big financial markets also act as these external centralizing vectors. I think on the low latency, high latency thing, I do believe that lower latency could lead to less extraction on the user side. It does lead to a latency race, so you got to find that balance. I don't think super long 10-second block times or whatever are ideal. I don't think 5 millisecond block times are ideal or even possible. So what we do at Jito, we basically we took the first come first serve approach that Solana originally took, and we hold discrete time batch auctions. So we give like 40 milliseconds basically for transactions to accumulate, and that's enough. It's enough of a technical barrier for it to be okay. You have to be somewhat technically competent to compete on this, as you should be. This is super technical stuff, but it's not super. It's not a super high barrier to where it's like you need to have very low latency infrastructure to have any edge on this. You obviously need all that, but you know, we're lowering the barriers a little bit.
Anyone else with takes on this latency game? I guess, Murat, you're trying to make Ethereum fast.
Yeah, well, latency is important, but on Ethereum, there's more than like the time for a transaction because you have 12 seconds to build a block. Sometimes, like what we're seeing with block builders is that they're waiting like a second or maybe second and a half to decide if they want to commit to a swap or a certain state transition. And they're eating some, you know, they're taking a hit on their bottom line with that, but they want to keep that optionality, in some cases a little bit longer when there's volatility. Now, the trader obviously wants that confirmation as soon as possible, but you're seeing the network react in a way where it's saying, hey, look, you know, we want to see what else comes in. And that's where a ruling like what, you know, Jito outlines, where like, okay, we're going to run a 40 millisecond batch auction. A rule like that could help, but good luck getting that on the Ethereum ecosystem with some consensus around a rule like that. And so, you know, at the time, we're stuck with a 12-second rule, and, you know, we're seeing how block builders determine it. Now, others try to come in and divide this up, whatever you want to call it, flash blocks or 1 second blocks and whatever, but all of these lead up to lesser economics for the Ethereum validator. So I don't think any of those are going to work in the Ethereum ecosystem, unfortunately, in an economically favorable manner.
Right, and do you think like, or maybe also Artemiy, I guess in Ethereum then, is the innovation kind of shifted, maybe because of these hard to reach consensus points, is it kind of shifted to the L2 layer? Are people working on that there, or?
Yeah, I mean, there's definitely some efforts on the L2 layer. Problem with L2s is they're not too differentiated, so then it comes down to like distribution, and Coinbase has better distribution than any other L2 you can reckon. So then, I mean, are we going to like a Coinbase chain like world where Ethereum just becomes Coinbase? So I'm not particularly bullish on that, especially given that it's not permissionless to innovate on. I mean, sure, you can launch a contract, but like you need Coinbase's permission to do anything else with it. And that doesn't really reflect the ethos of Ethereum. I think it's great that we have Base, but like Ethereum L1 is a good chain. So if we can improve that in some sort of way, provide better experiences on it, that's where a lot of assets are. So yeah, and the L1 forward vision is how a lot of L1s are winning. Like Bitcoin never did an L2. Bitcoin has more assets in TVL than anything else. So I think that works. So I don't see a reason to go all in on L2s. But I do like the ability to have some differentiation because you make some other choices with this chain, and I think that's also healthy to have.
All right, maybe talking about differentiation, like Artemiy, how do you see MEV as like a differentiator for you as a validator? Like you engage with it a lot, yeah.
Yeah, so basically, how do we differentiate using MEV? Or
Yeah.
Yeah, so basically for validators, especially when like P2P work, when we work with institutions, with bigger enterprises, so for us it's a game to optimize earning for our clients, and we mostly, like we did two things. On ETH, we started promoting time in gains until it's like we became relatively famous, like mid last year. So with Daily Gwei and Bankless mentioning us, but we did like mostly what Coinbase did always with Lane, and it's all healthy in the end. So that's one thing, and in the end we share. So everything like which is extra we gain on MEV, we share with the clients because they are very demanding, and the competition is fierce among staking providers. Last year we had a panel like staking yield race to the bottom, and here we are. I sometimes recollect this panel and this header, and it actually is. So
we're at the bottom.
In Solana, pretty similar. We share most of MEV yield in agreements with the clients. So for us, it's basically two ways: keep clients satisfied and happy, and to keep like network in a healthy state in our actions, non-toxic.
Okay. Maybe, I guess we're running out on time here. Like maybe like one last take of who will capture MEV in the future, like which actor.
Yeah, I think back to your question earlier, actually, about the philosophical, like, is MEV good or bad? I do think there's a philosophical piece. There's a position you can take where MEV is naturally in contention with a user getting screwed over. So over time, I think you want to see MEV kind of go down. A lot of that, if you just look at a lot of Ethereum data, a lot of Solana data, like high Jito tips, high tips on Ethereum, a lot of it was just users really getting screwed over or inefficient markets leading to that, and that's not sustainable over a long period of time. So in terms of value capture, I think you kind of accept that on a unit basis it should go down, but in the long run you expect a lot more volume because now that's a more sustainable market ecosystem for that specific blockchain. And I think value capture gets spread amongst validators. It should definitely go back to apps in some capacity. We're building on ways to do that right now. And yeah, I mean, basically everybody that makes the chain healthy.
Yeah, so in my view, like in the long run, in MEV will be mostly captured by the interfaces which own users, like wallets, some aggregators. Searchers will, of course, use some sort of niche, sophisticated strategies. Yeah, block builders will become like maybe like wide range but low margin business, and hopefully like who will capture MEV will share it with the end users.
Yeah, I think ZK EVM or ZK virtual machines are gonna change the game a lot here. It's gonna be interesting to see like if there's anything that's gonna be extractable directly, or is it gonna turn into some blind extraction regime? And that's gonna be the biggest disruptor to block building in general, at least on Ethereum. So that's one thing I'm looking forward to seeing the effects of.
Awesome. Thanks so much for joining me, and for all of you for being here and listening. And yeah, we'll have the next panel start right now. Thanks.
My pleasure.